Welcome back to Thought Kernel, where we break down educational concepts, not just to understand them deeply, but to be able to apply them in the real world for future careers or development. Essentially, what we're going over today is a common beginner-friendly strategy that allows us to introduce ourselves into financial analysis and how to program it. First off, we used Python today in my Jupyter Notebook, where I host my code through my browser. I'm a big fan of Jupyter Notebook. So first off, as you can see here, our program ran 100% completed and outputted this very nice graph, courtesy of matplotlib, an essential library I used in my code, allowed us to display this. You can see in the apple close. So essentially this, at an interval of 1 day, analyzes the close price compared to the 10-day moving average and 30-day moving average of those close prices. And now a common strategy would to be analyze where they cross and meet as indicators of potential buys or sells. While this is no financial advice, as I personally do not believe in this strategy, and it also does not perform well in volatility. Essentially, if the market was way more abrupt, even though it seems very abrupt and volatile here, which it is, in long term, Apple's not volatile. A stock that would be something like CrowdStrike. Especially after the CrowdStrike incident, where all of their systems shut down across airports, they definitely lost money. So let's examine the volatility. You can really see CrowdStrike. It would have told us to sell here before it massively went up. Or actually, wait, no, this is a buy indication. So actually, it would have accurately predicted it here. It would have negatively predicted it there. And it would have, I think, also negatively predicted it there. So essentially, it does not work, is what I'm telling everyone now, that this is not financial advice. So going back to the code. The 3 libraries I used, which are essential to every Python project in finance, would be yfinance, which gives me the real-time data from Yahoo Finance, and then pandas, which I use to manage data in data frames, which allows me to get very cool outputs with matplotlib, which I already mentioned before. And now getting into it, I did not use any functions for this program. I really did not follow the conventions of proper coding, but I hoped I made it readable, at least. So, essentially, here's our data fetch, which I know this kind of isn't the best, as I made it the same as when you call a data frame in pandas, but we're just going to work with it. So these variables allowed me to just enter simple arguments to the yfinance documentation. You can see I pulled it up when you want to import yfinance and so yeah, here when you enter the arguments, it is specific to what you are trying to do in the code. So I entered my specific arguments, the ticker symbol, which when I saw I easily changed it to CrowdStrike, and it outputted it immediately. I could change it to whatever, and it will do it instantly. So that is why I just listed out those variables easily and kind of really didn't follow the conventions, to just get it done quickly and to not confuse anyone starting out. Now following that, we had to calculate the moving average with data frames, which is an essential part of pandas. So we created the data frame, which is our short window of the moving average, using the rolling, essentially moving, and then mean, which is the average. So we did this of the data frame. So we used the close price, which, if I could show you, when I print the data frame of this, it provides us with a close price for every single day as the index. So we're taking every single day of the close price and averaging it, and then we're taking every single close price from the long for 30 days and 10 days, and then averaging it. And that is essentially what gives us this. Every single return in that data frame that we get from the mean is presented here. Now the real magic happens in matplotlib when we plot it. So I essentially start out with the beginner information, just like as you can see, specifying colors, lines, and how it would be differentiated between each other. Then next we just gave it the basic information, the title, labeled it with a grid, and how it's going to lay out and be visualized, and a line graph. And then this code, furthermore, allows us to save it. This will save it to the folder that your current program is in. So my program is in my computer, and then when I do this, it saves it every single time I run it. So I probably accidentally just saved a bunch of photos by running this, but it's fine. And the most important part is plt.show. This is essentially matplotlib.show, and this is what it provides it. Without this, we cannot see this data. And yeah, if you want to do this on your own with different amounts, 1 year, should be 1 year, and an interval of, you can do 5 minutes, or whatever. That would give you a lot of data and probably crash your computer. It would definitely crash mine. But yeah, we can see over a year it performed very differently. Yet again, this is not financial advice, and I thank you for watching, and I encourage you to try this on your own. And a greater project you could try to do is program it to indicate on matplotlib plot points where they cross, and say if the 10-day moving average comes up from under, that would indicate that the price is going to move up, so you would do a buy right there. You would say, hey, buy right here, and looks, it does go up. So, and right here, when the 10-day moving average goes under the 30-day, you can see the price goes down. It says it's going to go down. It goes down a little bit and then goes up. Then this is essentially not financial advice. It's not always accurate, but it was accurate here. You really never know due to the efficient market. And yeah, thank you for watching. I encourage you to try this on your own, and have a good day.